We are at the beginning of, right here, a major, massive economic recession. And the things that are going to take the hits are the debt-based assets. The dollar is going to take a pummeling. It's going to be depleted of its purchasing power massively.
Your ATM is safe, your banks are safe, there's enough cash in the financial system, and there is an infinite amount of cash at the Federal Reserve. We will do whatever we need to do to make sure that there's enough cash in the banking system. An infinite amount of cash at the Federal Reserve.
This very well could be the largest economic crash that we have seen in the past 100 years. I would not call that an unrealistic or wild prediction by any means. That's the kind of lesson I'm trying to get across to my family right now. How can they not get screwed over financially by a system that is so fundamentally corrupt that it is stealing from every American? Hi guys, my name's Colin and this is Colin Talks Crypto. We are in a crazy time right now. We are literally making history as the days move forward. I feel that we're going to refer back to these times in 50 years as one of the most significant changes in the United States history. So I'm going to have a heart-to-heart with you in this video. And nothing I say in this video is financial advice, and I'm not recommending that you do anything personally. I am going to share with you a message that I sent to my very own family so you can get a flavor for what I'm looking at. And if a message to my own blood, my own kin, does not give you a sample of how I'm thinking, then I don't know what does. So just today, I sent this message to some of my family members. I said, I strongly encourage you to consider putting a percentage of your savings into non-debt-based assets, such as Bitcoin and gold. Dollars held in savings over the coming months or years are going to lose a lot of purchasing power due to a newly approved unlimited money printing solution by the US government. Like I said, we are in crazy times right now. This is nutso territory. And I'm going to break down why I said this. So, first of all, why did I say a non-debt-based asset? Well, to answer that, let's take a look at what is a debt-based asset. A debt-based asset could be things like a savings account, bonds, annuities, and certificates of deposit. These are all debt-based assets. Actually, the dollar is also a debt-based asset. Ever since the dollar was taken off the gold standard, and now that it is fully off the gold standard, and it has been for many decades, the dollar itself is a debt-based asset. And so I have some family members who haven't bought crypto, and of course I always share this with them, but I feel like it's really hitting home, and I feel like it's really important that they don't miss this opportunity, and they don't get, not only do they not miss this opportunity, like that's like the next level of thinking at this point. Right now, it's more like, how can they not get screwed over financially by a system that is so fundamentally corrupt that it is stealing from every American? That's the kind of lesson I'm trying to get across to my family right now. I'm not even worried about making them, crypto rich or anything like that. I just want them to not lose all their money or their hard-earned savings. So I'm recommending that they do not hold their money in any kind of debt-based asset. And that includes stocks as well. I feel it is extremely risky right now to have any holdings in the stock market, in the dollar, in bonds, in property, in real estate. All of these things are highly, highly risky right now. So we have the Fed announcing unlimited quantitative easing, which is a fancy term for inflation and printing of money. And we have the Fed also announcing unlimited purchases of assets. They're going to be printing money left and right and buying up everything they can in the desperate hopes to keep the economy afloat. Now, the bright side is that in stark contrast to that dire economic situation, we have Bitcoin's inflation reducing by 50% in 50 days. So on one hand, we have the Federal Reserve printing trillions upon trillions of dollars. In fact, they've stated that they are willing to print an unlimited amount of money, an infinite amount of money.
And there is an infinite amount of cash at the Federal Reserve.
That rings some hyperinflation bells in my mind. And we're not in hyperinflation just yet, but with unlimited amounts of money, that is exactly how you get there. So, Federal Reserve printing trillions upon trillions upon trillions of dollars, hundreds of billions per day or trillions per day for the unforeseeable future. And meanwhile, we have Bitcoin scheduled to reduce its inflation by half in 50 days from now. The choice is very clear to me. And here you can see the Bitcoin block reward halving countdown. And as you can see, we have 50 days left to go. May 13th, 2020, the inflation schedule of Bitcoin will cut in half. So if you think about it, would you rather keep your money in an asset like the dollar or the stock market, which is based on the dollar, where the government, without any approval from ourselves, is going to print on a whim as much money as they feel is necessary to stabilize the economy, thereby reducing the value of every single dollar that you hold? Or would you rather have your money in an asset like Bitcoin, which not only doesn't increase its inflation, it decreases its inflation over time? That or gold. I would take gold or silver over the dollar any day of the week here. So this is part of what I'm trying to explain to you. This is why I'm sending this message to my family. And I feel like we're getting to that point where it's getting urgent. It's actually a little late in the game right now to be doing this, but it's still better than not doing it. There's still time to safeguard one's assets. And again, I'm speaking about myself and what I said to my family. I'm not telling you what to do, and this is not financial advice. I made a video many months ago where I showed the Dow Jones chart triple topping. It topped 3 times. It ended up going a little higher, but I knew that we are near the top, and here it is. We have finally rounded that top and corrected, and now it is crashing. So now I want to show you guys something crazy. So on the US Treasury.gov website, Treasury.gov, this is the governmental website for the US Treasury yield curve rates. And what do we see here? We see a bottomed out 1-month yield. We see a bottomed out 2-month yield. We see a bottomed out 3-month yield, a pittance of a yield for the 1 year, and so on. This yield curve has been utterly devastated. And that is exactly why the US government and the Federal Reserve right now is trying to pump money into the economy and pump debt into the economy as wildly and as fast as they possibly can, because they want to try to salvage the economy and try to uplift this yield curve. It hasn't been working so far, and there's only so far that you can do that. And I think that we're seeing the end of that effectiveness. It worked a little bit, partially, temporarily in 2008. It got us all the way to 2020. Well, guess what? Here we are again in the exact same situation, only 10 times worse, maybe 100 times worse. This very well could be the largest economic crash that we have seen in the past 100 years. I would not call that an unrealistic or wild prediction by any means.
Your ATM is safe, your banks are safe, there's enough cash in the financial system, and there is an infinite amount of cash at the Federal Reserve. We will do whatever we need to do to make sure that there's enough cash in the banking system.
An infinite amount of cash at the Federal Reserve.
So at the end of today, when they finally update this, I'm really interested to see what the new figures are. But let's take a look at a chart based on the Treasury yield curve data. And I'm going to just show you something here. So we have the 3-month column and we have the 10-year column. And what I'm going to do is show you a chart that shows you the difference between the 10-year and the 3-month. Now, logically, the 10-year should always be considerably higher than the 3-month because you want to get more return for having your money locked up for a longer period of time. And actually, for a period of time last year, and I'll show you this chart right now, for a period of time last year, right here, this was a 5-month period from around May to August or September of 2019. We have what's called the yield curve inverting. And that would be when the value right here on the 10-year column was actually lower than the value here in the 3-month column, and it went negative. So it's actually counterintuitive because you would get less money for investing in Treasury bonds on a long term than the short term. And that indicates economic collapse or recession is impending. It's coming up. And historically, this chart shows that every time that that has happened, every time that the difference between the 10-year and the 3-month has inverted, following that, shortly after, is a recession. And so here's a moment where that happened. Here's a time where that happened. And here's a time where that happened. Well, guess what? We just had that last year, 2019, and it happened again. Each one of these gray areas right here, I'll just mark the top of them, is the actual recession. Here's the 2008 recession, housing crisis. And here is our next recession. I'm going to mark it right here. We're riding into it. We're at the very beginning of it still. I noted that there's always a delay, or tends to be a delay, of about 1 to 2 years between the inversion of the yield curve and the recession. See the difference between here to here? It's 1 to 2 years. Here's a shorter one, maybe 6 months or a year. Here's a longer one, 1 to 2 years. And here we had another inversion, and so I give us 1 to 2 years. And we're riding right into the next recession, or depression, actually. It very well could be a depression. Also, what you'll notice when you look at this chart, let me clear this up here, is that every time the inversion occurs, right after it, it goes nearly vertical. We have this near vertical, right? Here's the inversion, nearly vertical. Here's an inversion, nearly vertical. Here's an inversion, and what do we have? Look at this. It's going nearly vertical. But I'm willing to bet you that when we see the data as this unfolds, this line here, this blue line, will begin to follow the pattern. It's going to go like this. And that just indicates that we are full on in a recession, just like right here and right here. And for anyone who says that the past examples where the yield curve inverted and that was followed by a recession and it happened these past 3 or 4 times is not a guarantee of it happening again, well, guess what? It's happening again. So this is an example. I'm taking you back to why I told my family this, because I'm seeing all the ducks lined up. All the indicators are lining up. We are at the beginning of, right here, a major, massive economic recession. And the things that are going to take the hits are the debt-based assets. The dollar is going to take a pummeling. It's going to be depleted of its purchasing power massively. So if I have family that has a savings account, they're going to be just losing money. However, if they take this opportunity right now to convert some of that money into crypto, Bitcoin, gold, they are then taking their money out of a debt-based asset. I also think they should take it out of the stock market. They're taking the money out of the debt-based asset and they're putting it into a non-debt-based asset. Bitcoin, cryptocurrency, gold, and silver are non-debt-based assets. And it's a really crazy time right now because with the coronavirus scare and the media fear being pumped into the system and legitimate people dying, we have at the same time an economic recession impending. And it's the ultimate recipe for catastrophe. And I'm not a negative person, and I'm not trying to be a doomsday guy. And I don't make any money off my videos. Just by the way, I don't have YouTube ads. In case you guys haven't noticed, I don't put ads on my videos. I do not monetize my videos in any way. I do not make profit from my videos. Therefore, everything I tell you, it's from my own passion and my own heart. I'm telling you straight as it is. I am telling you from me to you with no economic incentive whatsoever that this is what I see. And so it's really sad because we have this virus, we have this fear, this scare, we have economic lockdown, everyone's staying inside, we have social distancing, we have all these preventative measures, and we have the economy taking a beating. And you know, the large corporations are going to be the ones that get bailed out. Boeing and Google are going to get bailed out if they need it. You know, the hotel industry, the flight industry, the cruise lines, these are going to get bailed out. It's the small and medium businesses, the home businesses that are not going to get bailed out. And it blows my mind that the government just rapes its people in such a horrific manner and cares so little about the people. And the proof is that they'll print the money and devalue the money and the dollar that everyone uses, and they won't bail out the small businesses and the medium-sized businesses that are making the economy go round. And so if you look at it from that angle, this is a very calculated move. It has very specific targets and very specific goals. And those goals do not include helping the lower class or the middle class. They include enriching the upper 1%, the elite, and to further enrich them. And to take control. It's really about control at this point. And so while large corporations will be bailed out at taxpayers' expense, small businesses will be enslaved by loan offers they can't refuse, as they have no choice in this economic shutdown. So as the federal interest rate drops and banks offer larger and larger loans to small and medium-sized businesses, and these business owners have no ability to run their business in many cases. They can't work, right? Because they're shut down. There's an economic shutdown. There's a coronavirus. It all plays into itself. So there's a virus, there's a fear, there's a shutdown. You can't work. You're running out of money. You can't pay your bills. You can't pay your rent. And then the bank says, hey, we're going to give you this awesome loan, $100,000, $50,000 at the lowest rates you've ever seen. And what are these guys going to do? The vast majority of the population, these small and medium business owners, the lower and the middle class, are going to have to accept that offer. They're going to have no choice because they have to put food in their own mouths, right? So what does that do? That indebts them to the banks. That indebts them to the takeover that's occurring right now. And so I strongly urge, if there's any way you can avoid going into debt or taking these loans that you're not going to be able to pay back, do not do it. Do not let them empower themselves over you and your business and your livelihood. Do not let them enslave you to them more than they already have. And so that's what's going to happen, guys. That's how I see it playing out. That's exactly why I told my family I strongly encourage them to consider putting a percentage of their savings into non-debt-based assets, such as Bitcoin and gold. And honestly, the only reason I said a percentage of their savings and not all of it is because I want to be within their realm of realisticness. Like, they're not crypto people, right? And so they'll think I'm crazy for saying this in the first place, but I need them to consider it. And so let's do it on a gradient, if nothing else. You know, if they have 50% of their savings in crypto and Bitcoin, my God, that's infinitely better than having 100% of it in the dollar or the stock market, where they're going to lose probably almost all of it. And if you are wondering why crypto and Bitcoin has seemed to follow the market down, it seems to have collapsed in timing with the market. And, you know, many of you have wondered, well, why isn't it inversely correlated? Why isn't it a safe haven asset? I would say, this is my opinion, and this is what I think is happening here. I think that we are seeing the short-term mirroring of the economy, the short-term reflection, but on a long term, I think that crypto and Bitcoin are going to be inversely correlated, and they are going to be safe haven assets. You know, we have to all take this in stride. The effects that we're seeing of the economic devastation could last for months or years. I would say it's likely to last for several years. And so to judge crypto and Bitcoin on just a couple weeks of sharp downward movements, I don't think is yet a big enough sample size to fully determine whether it's coupled or not. And in the past couple of days, we have seen actually some rises in crypto that have not been in sync with the economy. The economy has continued plummeting, and Bitcoin and crypto has remained flat or even gone up a couple percent. So as time goes on, I do feel that we are going to see a decoupling of safe haven assets, of non-debt-based assets, such as Bitcoin, cryptocurrencies, gold, and silver on an increasing basis. But the point I want to make here is that it's not going to happen necessarily overnight. It might take weeks, it might take months, it might take a year. I think probably in the months range is what I'm thinking, because we have a halving coming up. The halving is not going away. The halving is occurring in 50 days. And historically, 6 months after the halving, well, 2 to 6 months after the halving is when the parabolic uptick occurs. And to be frank, I see this as being no different. I do feel we are going to see a bull run upward. And it could be strengthened by the fact that the economy is recognized as being utterly weak and destroyed by that point. So I would just say, hold on to your britches. You know, I think we have seen nothing yet. I haven't sold a cent. I haven't sold a single Satoshi or a single token, and I'm holding strong. I'm waiting for that moment, because Bitcoin isn't the one printing trillions of dollars a day. That's the US dollar. So it's inevitable, in my opinion, not financial advice. So please, please, please do yourself a favor. Think about what I've shared with you. Make your own decision, do your own research, and safeguard your future as you see fit. And share this message with your friends and family so that they safeguard their future and they are not taken advantage of by this horrible, horrible economic situation that we are all facing right now. I hope this helps, guys. I hope you can educate your family and friends from this. This is the message I'm spreading. And let's not end up in a situation where our dollars and our savings are just whittled away by this newly approved, unlimited money printing solution by the US government. Be safe, be smart, and in crypto we trust. When it comes to the issuance of money and control of money, I trust math, I trust crypto, I trust Bitcoin.
An infinite amount of cash, an infinite amount of cash, an infinite amount of cash, an infinite amount of cash.